Hello everyone, and welcome back to today's second episode of the Capital Markets Quickie. I'm your host, Endrit Cela, and today I've got some exciting insights to share with you. We're diving into the most recent Fund Manager Survey, FMS, from Bank of America and Merrill Lynch. And folks, let me tell you, the findings are pretty revealing. So, let's kick things off with a headline that's caught everyone's attention. This survey is being called the most bullish FMS we've seen in the last 2 years. Investors have sharply reduced their cash holdings to 4.2% from 4.8%, signaling a major shift in sentiment. For the first time since April 2022, the big guns managing those hefty funds are not bracing for a global recession. Now, digging a bit deeper into where this newfound confidence is being channeled, we see a significant move towards U.S. stocks, with allocations reaching their highest point since November 2021. And get this, the tech sector is now the belle of the ball, seeing its highest allocation since August 2020. It seems like everyone's trying to get a piece of the Magnificent Seven, making it an extremely crowded party. But here's a twist. The Bank of America Bull and Bear indicator is sitting at 6.8, suggesting that while optimism is high, this aggressive positioning might actually start to pose a challenge for risk assets. It's like the market's version of a double-edged sword. On the macro front, for the first time in nearly a year, the investors surveyed aren't predicting a recession. Instead, there's a wave of optimism about global growth, the highest we've seen since February 2022. When asked about the economy's path this year, 2/3 of investors are betting on a soft landing. Policy-wise, lower interest rates are being hailed as the catalyst for this surge in optimism. Only a tiny fraction expect higher short rates, and similarly, just 7% are betting on higher inflation. Meanwhile, a whopping 85% predict that the yield curve will steepen, signaling expectations for a more dynamic interest rate environment moving forward. Now let's talk about the crowd's favorites and the leaders of the pack. The long Magnificent Seven trade is the most crowded we've seen since the long US dollar trend back in October 2022. And when it comes to China, opinions are mixed. But a notable portion of investors suggest a structural underweight on Chinese stocks might be the right move. As for asset allocation, we're seeing a tilt towards global equities, especially US stocks and the tech sector, with a preference for growth over value, a trend that's been building since May 2020. Interestingly, investors are moving away from cash, commodities, emerging markets, and even energy stocks, which have hit their lowest point since December 2020. And for those of you who love a good contrarian viewpoint, the survey suggests some interesting trades. For a hard landing scenario, it might be wise to lean into cash, defensives, and short US, Japan, and tech stocks. On the flip side, if you're in the no landing camp, consider going long on commodities, energy, the US dollar, and shorting bonds. Well, that wraps up our deep dive into the latest fund manager survey from Bank of America and Merrill Lynch. Thanks for tuning in to today's episode of the Capital Markets Quickie. I'm Endrit Cela, and I'll be back tomorrow morning with more insights from the world of finance. Cheerio.